Over the past few years, Ethereum has evolved far beyond its original identity as a programmable blockchain. It has become the foundation of decentralized finance, tokenized assets, institutional blockchain infrastructure, and next-generation financial systems. Even during periods when price growth slows or becomes volatile, the underlying adoption of the network often continues to expand. In 2026, Ethereum is experiencing exactly this paradox: sluggish price growth paired with accelerating institutional adoption. Today, we will talk about Ethereum maintains its institutional adoption despite sluggish price growth. So before we start, make sure to hit the like button and subscribe to my channel. A short squeeze ignites market momentum. Ethereum recently experienced a dramatic short squeeze, and a market event where traders betting against the asset are forced to close their positions as prices rise unexpectedly. In this case, more than $142 million worth of short positions were liquidated within just 24 hours, triggering a rapid upward move in Ethereum's price. Short squeezes often occur when markets become overly bearish. As the price begins to climb, traders holding short positions must buy back the asset to close their trades, which accelerates the rally. In Ethereum's case, the squeeze pushed the price above $2,350, catching many bearish traders off guard. Institutional accumulation is reshaping Ethereum's market. Behind Ethereum's recent price movement lies a powerful structural trend: institutional accumulation. Large companies and funds are increasingly adding ETH to their treasuries, while treating it not only as a speculative asset, but also as a yield-generating financial instrument. Institutional players are attracted to Ethereum for several reasons. Staking rewards provide consistent yield. The network supports tokenized financial assets. Ethereum dominates the decentralized finance ecosystem. It has a mature infrastructure trusted by regulators and institutions. This shift means Ethereum is increasingly being held for long-term strategic value rather than simply traded for short-term speculation. Bitmine Immersion Technologies emerges as a major Ethereum powerhouse. One of the most dramatic institutional moves has come from Bitmine Immersion Technologies, a company that has completely reinvented its business strategy. Originally focused on Bitcoin mining hardware, Bitmine has transitioned into becoming one of the largest corporate holders of Ethereum in the world. The company now controls approximately 4.87 million ETH, valued at around $10.7 billion, which represents roughly 4.04% of the entire circulating supply of Ethereum. This makes Bitmine one of the largest single institutional holders of ETH globally. During the week ending April 13th, the company purchased 71,524 ETH, marking its largest weekly acquisition since December 2025. Staking becomes the institutional blueprint. Bitmine is not simply holding Ethereum, it is actively generating yield through staking. Through its proprietary Maven platform, the company has staked approximately 3.33 million ETH, generating an estimated $212 million in annual staking rewards. Now, this approach demonstrates a powerful financial model where Ethereum holdings function similarly to yield-bearing digital bonds. The staking strategy is increasingly being adopted by other companies as well. For example, the Nasdaq-listed company BitDigital recently expanded its staking activities by adding 29,900 ETH on April 13th. In just a single week, the firm earned approximately 291 ETH in staking rewards. This growing institutional participation in staking reduces the circulating supply of Ethereum, which could create long-term supply pressure that supports higher prices. Ethereum ETF continue attracting capital. Another major source of institutional demand is exchange-traded funds. While Bitcoin ETF recently experienced large capital outflows, Ethereum-focused ETF have been moving in the opposite direction. On a single Monday, Ethereum ETF recorded $9.44 million in net inflows, highlighting growing institutional interest. One of the most prominent new products is the ETH ETF, launched by BlackRock in March 2026. This ETF is unique because it actively stakes between 70% and 95% of its Ethereum holdings through Coinbase Prime. This strategy allows the fund to generate staking yield while maintaining exposure to Ethereum's price, making it an attractive investment vehicle for institutional clients seeking both growth and income. Traditional finance continues entering the crypto market. Institutional adoption is also being driven by major financial companies expanding their crypto services. Financial giant Charles Schwab, which oversees nearly $12 trillion in client assets, recently announced plans to introduce spot trading for both Bitcoin and Ethereum during the first half of 2026. This development is highly significant because it will provide millions of traditional investors with easier access to digital assets through a familiar brokerage platform. As major financial institutions integrate crypto trading, Ethereum could gain substantial new demand from retail and institutional investors alike. Ethereum Foundation changes treasury strategy. Another major development influencing Ethereum's supply dynamics is the strategic shift by the Ethereum Foundation. Historically, the foundation periodically sold ETH from its treasury to cover operational expenses, which are estimated to be around $100 million annually. These sales created consistent selling pressure in the market. The trillion-dollar security initiative security remains a critical priority for Ethereum as the ecosystem continues expanding. To strengthen the network's infrastructure, the Ethereum Foundation recently launched the trillion-dollar security initiative, committing $1 million towards smart contract security audits. Professional security audits can cost up to $500,000 per project, making them difficult for smaller developers to afford. By subsidizing these audits, the foundation aims to make the ecosystem significantly safer. This is important because unaudited smart contracts have been shown to fail at 3 times the rate of audited ones, leading to major financial losses in the past. Now, improving security will help Ethereum maintain the trust of institutions and developers building large financial applications on the network. The Glamsterdam hard fork, a major technical upgrade, Ethereum's next major catalyst, could come from its technical roadmap. The upcoming Glamsterdam hard fork, scheduled for the first half of 2026, aims to dramatically improve the network's scalability and efficiency. If you liked this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.